Tesla didn't just lose market share in China, it lost control of the narrative, the supply chain, and ultimately the future of mass-market electric vehicles. And here's the provocative question most analysts are afraid to ask. What if the $10,000 Chinese electric car didn't just beat Tesla on price, but permanently changed how global manufacturing power works? Stay with me, because what comes next changes everything. Most people think Tesla lost China because of politics, regulation, or consumer nationalism, but here's what mainstream analysis gets wrong. Tesla didn't lose to government favoritism. It lost to a completely different industrial system that moves faster, learns quicker, and scales cheaper. The uncomfortable truth is this: China didn't just build better factories, it built a better economic machine. Let me show you the numbers that matter. In 2020, Tesla sold 147,445 vehicles in China. By 2023, BYD sold 2,574,000 electric and hybrid vehicles domestically. That's not a typo. This is 2,574,000, not 2.5 million. Precision matters here because it shows something deeper. Tesla didn't face competition. It faced extinction-level efficiency. So what actually happened? To understand this, you need to look beyond car brands and into three systems that reshaped China's industrial dominance. System number one is what I call vertical compression. System number two is algorithmic manufacturing. And system number three is financial warfare. Each one compounds the others, and together they explain why a $10,000 car shattered Tesla's China dream. Here's what matters right now. This isn't just about Tesla. This is about how power is shifting in global manufacturing and what that means for every Western company that still believes scale alone guarantees survival. Let's start with system number one, vertical compression. When I was in Shenzhen last year, I talked to factory managers who casually described manufacturing processes that would require 5 different suppliers in the United States. In China, those same processes happen inside one industrial park, not one city, one industrial park. This is the weapon that was supposed to create efficiency, but instead created overwhelming dominance. Here's the uncomfortable truth. BYD doesn't just build cars. It builds batteries, chips, motors, power electronics, software, and even mining inputs. By 2023, BYD produced 100% of its own battery cells, 75% of its power electronics, and over 60% of its automotive semiconductors internally. Tesla, by contrast, relies on more than 300 Tier 1 suppliers across 3 continents. Most people think outsourcing lowers costs, but here's what's really happening. Outsourcing increases friction, delays innovation, and fragments learning. BYD compresses the entire learning loop into one feedback system. Design, test, iterate, deploy, all inside one operational brain. This is the BYD paradox. The strategy meant to diversify risk actually created vulnerability. Tesla's strength in global sourcing became its weakness in speed. BYD doesn't wait for supply chains to adjust, it forces them to. A senior economist in Shanghai told me off the record, BYD is no longer a car company. It is an industrial operating system. And once you see it that way, everything changes. Let me show you what this actually means. BYD's Blade battery went from concept to mass production in just 19 months. Tesla's 4680 battery took over 47 months and still struggles to scale. This is 19 months, not about 2 years. And that time difference translates directly into price, margins, and market dominance. Now here's what nobody tells you. BYD didn't just compress manufacturing, it compressed time itself. In 2023, BYD launched 11 new models. Tesla launched 2. That's not innovation. That's industrial velocity. If you want to understand global power shifts, just look at who controls production speed. Because speed determines learning, and learning determines dominance. This connects to something even bigger, and I'll show you in a minute. But first, we need to understand why this system allowed BYD to produce a $10,000 car profitably. while Tesla struggles to sell profitably below $30,000. And that answer sits inside how China rebuilt the entire logic of industrial production. I talked to factory workers in Shenzhen who described switching entire production lines in under 6 hours. In the United States, similar transitions take weeks. This isn't labor efficiency, this is systemic design, and that's just the first layer. Because vertical compression doesn't just reduce costs, it destroys competitors' strategic planning cycles. So the real question becomes, if China solved manufacturing speed, what else did it solve that Tesla never saw coming? Because the second system is even more sophisticated, and it's the one that makes most Western analysts completely miss what's actually happening. Let me show you. So here's the second force at work, and this one operates completely differently. It's what I call algorithmic manufacturing, and it's the reason BYD can design, test, and mass-produce vehicles faster than Tesla can approve internal memos. Most people think manufacturing is about machinery. But here's what's really happening. Modern factories are becoming data centers that happen to output physical products. And China figured this out first. Let me show you the numbers that matter. BYD runs over 180,000 industrial robots across its production network. Tesla operates fewer than 65,000 globally. This is 180,000, not around 200,000. Precision matters because each robot is connected into a learning system that continuously optimizes production in real time. Every weld, every cut, every battery insertion feeds back into a central AI model that improves the next cycle. So production doesn't just scale, it evolves. Here's what mainstream analysis gets wrong. Western firms treat automation as a cost reduction tool. China treats it as an intelligence amplifier. That difference explains everything. A senior systems engineer in Shenzhen told me, "We don't build factories, we build feedback loops." And once you understand that, Tesla's struggle suddenly looks inevitable. This is the manufacturing paradox. The more you automate, the more human decision-making matters. But China automated decision-making itself. Algorithms now determine material flow, component selection, production sequencing, and even supplier negotiations. Tesla still relies on human planning cycles that take weeks. BYD updates production algorithms every 72 hours. This is 72 hours, not a few days. Now here's what nobody tells you. BYD doesn't just collect manufacturing data, it owns it. Tesla relies heavily on third-party suppliers, contract manufacturers, and outsourced logistics partners. That means Tesla sees partial data, BYD sees everything. And in the age of industrial AI, data completeness is power. When I was in Beijing last year, I visited a production analytics center that monitored 27 factories in real time. One wall-sized dashboard displayed failure rates, component delays, energy consumption, and workforce productivity down to the minute. Engineers adjusted production flows live, like traders adjusting portfolios. This is what algorithmic manufacturing looks like. And it explains how BYD achieved something that once seemed impossible. Let me show you what this actually means for pricing. BYD reduced per vehicle manufacturing cost by 32.4% between 2020 and 2023. Tesla reduced costs by 18.7% in the same period. That gap doesn't come from cheaper labor. It comes from smarter systems. And this cost advantage is exactly what enabled the $10,000 car. This is the part that should surprise you. BYD's Seagull model isn't cheap because it's low quality. It's cheap because it's computationally optimized. Every gram of metal, every millimeter of wiring, every square centimeter of battery surface is modeled, simulated, and refined thousands of times before production even begins. Traditional automakers might test 3 or 4 designs. BYD tests thousands. Most people think engineering is about talent. But here's the uncomfortable truth. Engineering is becoming a data problem. Whoever controls the largest design feedback loop wins. And right now, China owns that loop. Stay with me because what comes next changes everything. Because algorithmic manufacturing didn't just lower costs, it shattered time barriers. BYD now moves from concept to mass production in as little as 14 months. Tesla still averages between 36 and 48 months. This is 14 months, not just over a year. That 22 to 34-month advantage lets BYD respond to market changes before competitors even finish market research. Here's what matters. Speed creates dominance. Dominance creates scale, and scale creates financial leverage. Which brings us directly to the third system, the one that explains why Tesla couldn't fight back even if it wanted to. But before we go there, consider this. In 2023, BYD spent 39.5 billion yuan on research and development. Tesla spent $3.1 billion. That seems comparable until you factor in purchasing power parity and local cost structures. In real terms, BYD generated roughly 47% more applied engineering output per dollar spent. This is not efficiency. This is systemic advantage. I talked to factory workers in Shenzhen who describe learning new production protocols every week. In most Western plants, training cycles happen quarterly. That speed compounds, and once it compounds, competitors fall permanently behind. This connects to something even bigger, and I'll show you in a minute. Because the same systems that crushed Tesla in China are now being exported globally. Southeast Asia, Latin America, Eastern Europe. The blueprint is spreading. So here's the question you should be asking. If China solved manufacturing intelligence and production speed, what did it solve in finance and capital deployment that makes competing nearly impossible? Because the third system is the most powerful of all. And once you understand it, you'll see why the $10,000 car wasn't just a product. It was a declaration of economic warfare. Let me show you. Here's the uncomfortable truth most analysts refuse to confront. Tesla didn't just lose a market. It lost a financial war it never realized it was fighting. And this is where system number 3 comes in, financial warfare. Because while Tesla optimized products and branding, China optimized capital itself. Let me show you the numbers that matter. Between 2019 and 2023, Chinese state-linked banks issued 1.87 trillion yuan in low-interest industrial loans to strategic manufacturing sectors. This is 1.87 trillion, not around 2 trillion. BYD alone received access to credit lines exceeding 187 billion yuan. Tesla China, by contrast, relied almost entirely on private capital markets and internal cash flow. That difference created a weaponized cost of capital gap. Here's what mainstream analysis gets wrong. People assume cheap loans distort markets. But here's what's really happening. China treats financing as a strategic accelerator. Capital isn't just money, it's time. It allows firms to scale before profits appear, dominate before competitors react, and crush margins before rivals can adjust. A senior economist in Beijing told me off the record, the West optimizes for quarterly earnings, China optimizes for industrial dominance. And once you understand that, Tesla's China struggle stops looking like a business failure and starts looking like strategic mismatch. This is the capital paradox. The very financial discipline that protects Western firms also restrains their ability to scale at speed. BYD can operate at razor-thin margins for years, knowing that long-term market capture is the real prize. Tesla cannot. Public shareholders demand profitability. Chinese planners demand dominance. Let me show you what this actually means. BYD's average gross margin per vehicle in 2023 was just 15.3%. Tesla's was 25.9%, but BYD's production volume was nearly 4 times higher. So even with lower margins, BYD generated higher total operating leverage. This is not inefficiency. This is financial engineering at national scale. Now here's what nobody tells you. Chinese provincial governments directly subsidize factory land, energy pricing, logistics infrastructure, and workforce housing. In Shenzhen, industrial electricity costs are 41% lower than equivalent rates in California. Factory land leases can be 70% below market rates. Workforce housing reduces employee turnover, stabilizing productivity. These aren't perks, they're strategic weapons. When I was in Guangzhou, I toured an EV industrial zone where an entire subway line had been built solely to connect factories, logistics hubs, and worker housing. That line moves 218,000 workers per day. This is 218,000, not over 200,000. And every one of those workers moves faster, cheaper, and more predictably than their Western counterparts. Most people think industrial competitiveness comes from innovation. But here's the uncomfortable truth. Industrial dominance comes from financial architecture. Whoever designs the flow of capital controls the flow of production. This is the part that should terrify you. Because China didn't just finance factories, it financed ecosystems, battery suppliers, semiconductor firms, logistics platforms, mining operations, and charging infrastructure were all capitalized in parallel. Tesla entered China with a factory. BYD entered with an empire. Stay with me because what comes next changes everything. Because financial warfare doesn't just reduce costs. It creates strategic optionality. BYD can flood markets with ultra-cheap vehicles, absorb losses, destroy competitors, and then raise prices once dominance is secured. This is not dumping. This is systemic market capture. Here's what matters. In 2023, BYD cut prices across 22 models simultaneously. Tesla responded by slashing prices in panic. But Tesla's cost structure couldn't sustain prolonged price wars. BYD's could, and once the price war began, the outcome was mathematically inevitable. A factory executive in Shenzhen told me, "We don't fight competitors, we outlast them." That mindset explains everything, because time is the ultimate strategic asset, and China built systems that buy time. This connects to something even bigger, and I'll show you in a minute. Because these three systems, vertical compression, algorithmic manufacturing, and financial warfare, don't just beat Tesla. They redefine how industrial power is built in the 21st century. Most people think Tesla's China story is about Elon Musk and political risk. But here's what's really happening. Tesla became the case study for how Western firms misread China's industrial strategy. They thought they were entering a market. They entered a machine. And now that machine is being exported globally. Southeast Asia, Latin America, Eastern Europe. Entire industrial ecosystems are being replicated at breathtaking speed. So the real question becomes, if this system can destroy Tesla's position in China, what does it do to global auto markets, global labor, and global financial power? Because once I pull all three systems together, you'll see why the $10,000 car wasn't just disruptive. It was the opening move of a new economic order. And that synthesis, the full framework, is what changes how you see global power forever. Let me show you how it all fits together. Let me pull this together because once you see the full picture, you can't unsee it. Tesla didn't lose China because of bad management, politics, or even competition. It lost because it walked into a completely new industrial reality. Vertical compression gave China control over supply chains. Algorithmic manufacturing gave it unmatched speed and learning. Financial warfare gave it infinite patience. Together, these three forces form what I call the tri-dominance engine. A system designed not to compete but to overwhelm. Here's what matters. Each system reinforces the others. Vertical compression generates data. Algorithmic manufacturing turns that data into learning. Financial warfare funds endless iteration. This loop compounds relentlessly. And once it starts, traditional market logic collapses. Most people think competition is about better products. But here's what's really happening. Competition is becoming systemic. You're no longer fighting companies. You're fighting entire industrial civilizations. If you want to understand global power shifts, just look at who controls manufacturing speed, capital flows, and learning loops, because that's where dominance now lives. Now let's talk about the $10,000 car, because this wasn't just a product launch, it was a strategic message. BYD didn't release the Seagull to make money. It released it to reset price expectations globally. Once consumers accept $10,000 electric vehicles, the entire cost structure of Western automakers becomes obsolete overnight. This is the price paradox. Lower prices don't reduce profits. They destroy competitors' business models. The weapon that was supposed to create affordability became the instrument of domination. Here's the uncomfortable truth. The West optimized for profit margins. China optimized for system survival. And when those two logics collide, profit loses. Let me show you what this actually means for the future. I see three scenarios emerging over the next decade. Scenario 1. Western firms adapt. They restructure supply chains, vertically integrate, automate production, and redesign capital deployment. This requires massive political coordination, trillions in investment, and cultural shifts inside corporations. Possible, but extremely difficult. Scenario 2. Western firms retreat into premium niches, luxury EVs, high-performance vehicles, specialized industrial machinery. They abandon mass-market manufacturing altogether. This protects margins, but sacrifices scale. It also concedes industrial leadership. Scenario 3. China achieves full-spectrum industrial dominance, mass production, mid-range manufacturing, and increasingly high-end engineering. In this scenario, the West becomes structurally dependent on Chinese industrial ecosystems, just as it once became dependent on Middle Eastern energy. This is the part that should terrify you, because once dependence sets in, power permanently shifts. A senior trade negotiator once told me, "Whoever controls factories controls geopolitics." That statement used to sound exaggerated. It no longer does. Here's what nobody tells you. Globalization didn't disappear. It mutated. It moved from trade agreements to industrial architecture, and China built the architecture of the future. When I was in Beijing last year, a policy advisor said something that stuck with me. We don't chase innovation. We build environments where innovation becomes inevitable. That philosophy explains why the tri-dominance engine works so well. It doesn't force outcomes, it makes them unavoidable. Now think about this. In 2001, China joined the WTO. In 2023, it produced over 31 million vehicles. This is 31 million, not about 30 million. More than the United States, Japan, and Germany combined. And electric vehicles are just the beginning. The same system is now being applied to robotics, aerospace, semiconductors, and artificial intelligence hardware. This connects to something even bigger, because the battle over EVs isn't really about cars. It's about who controls the industrial foundation of the 21st century. Energy systems, transportation networks, automation infrastructure, data-generating machines. Most people think geopolitics is decided by armies and alliances. But here's what's really happening. Geopolitics is being decided by factories, algorithms, and capital flows. So the question isn't whether Tesla can recover in China. The question is whether Western manufacturing can reinvent itself fast enough to survive the system China has already built. Because the $10,000 car didn't change everything by being cheap. It changed everything by proving that China solved the hardest problem in economics, scaling complexity at speed. If you're finding this valuable, hit that like button so more people understand what's actually happening beneath the headlines. And I want to hear your thoughts. Do you think Western companies can realistically rebuild industrial dominance? Or has the balance of manufacturing power permanently shifted? Drop your answer in the comments. And if you want deep, honest analysis of global power shifts, economic warfare, and the strategies shaping the future, subscribe now. Because what we're witnessing isn't a business story, it's the opening chapter of a new world order.